So let's get into the global macroeconomic picture. I think this is really it's important because there's so much going on. So we can start with just inflation, and you think about how inflation works, and there's really two elements to it. First is you have supply side inflation, which is just a constriction in supply of certain things forces price to go up. And then on the other side, you've got demand, which is consumers are out trying to buy goods and services. And so if you've got a lot of people doing this, then you've got the standard definition of inflation, which is too much money chasing too few goods, right? So, in that sense, I think we've got two different types of inflation. So if we start on the supply side and just go back and think about where we're at today, so much of what we're dealing with came from the policies that were instituted as a result of COVID. And this goes to the global lockdowns. And, before that, it was really the offshoring of all of our supply chains. And so the benefit to offshoring when you do things like supply chains are that, one is that you're more efficient. The cost of labor goes down overseas. You can find ways to cut a lot of cost. But so those are some of the benefits. But the downside is that you have these single points of failure and they become less robust. There's no redundancy because each area of the world that you're shipping, bringing things in from has become so specialized that there really isn't any redundancy. And so whether it's pharmaceuticals coming from China, whether it's semiconductors coming from Taiwan, whether it's oil and gas coming from the Middle East or from Russia, the bottom line is that the supply chain in the world, it's become inextricably linked. And so when you have both, this weird thing with the pandemic, now couple that with what's going on in Russia and these political moves, it creates these dislocations and actually can cause some really serious inflation on the supply side of things. And then if you look at the demand side, the demand side of inflation is probably the area that the Fed has more control over. Because by raising interest rates or tightening monetary policy, shoring up liquidity, things like this, you can try to slow demand down. And so, if you look at the Fed's more recent hawkish transition, it's strictly because they want to slow the demand side down. I think they've come to terms with the fact that it's going to be really, really difficult for the Fed to do anything, frankly, about the supply side of things. And so when you look at the different types of inflation and we start getting into some of the weird things that are going on right now, steel prices have shot up. Nickel prices have shot up. Just based on certain things that have taken place with respect to, I'm not going to say hoarding resources, but more protectionist strategies. Countries have stopped, or either have already stopped or are in the process of stopping certain exports. One of the big ones is phosphate out of China, ammonia, and the reason those are important is because these are ingredients that go into making fertilizer. And so not only do you have a potential shortage because of some of the wheat that's not coming out of Ukraine and Russia due to their conflict, but on top of that, you've got a major potential fertilizer shortage. And that's not the kind of thing that resolves overnight. In fact, it's not the kind of thing necessarily that resolves within 12 months. Doomberg on Twitter, if you can jump on Substack, look them up, Doomberg, Doomberg, and they have a little green chicken sign, so shout out to Doomberg. They do a terrific job of outlining some of the fundamental problems that we're facing when it comes to our food supply. And they've gone on record publicly as saying that we are on the cusp of a global food famine. Now, fortunately for those of us who reside in the United States, we're probably, it's hard to say whether we'll experience real food shortages or not. I think the jury's out for now. However, I think globally there's a high probability that that's going to be the case. And so our problem in the United States is that we're going to deal with food inflation. The costs are simply going to continue to go up. And there may be shortages. So this is just part of the global macroeconomic picture. Some of this stems from just bad policy for years. Some of this stems from the conflict that's broken out in Ukraine, and some of it stems from COVID. So all of these are contributing factors to why food inflation is going to be a huge issue going forward. And that's, if you think about inflation, it's a tax because when you pay more, you don't get more, you actually get less. So you're paying more to get less. And think about it from an economic standpoint, people at the lower end of the socioeconomic scale are the ones who really carry the bulk of the burden because their budgets are pretty limited. And so if they have to spend more on food, on energy, on gas for their car, then they don't have the room to spend on consumer goods or other types of services. And so you could see, when you think about the U.S. economy and GDP, 70% of GDP is based on consumer spending. And so for a big chunk of consumer spending, you're just going to see that demand get rerouted and certainly shut down in some areas. And then on top of everything else, if you just think about all the fiscal stimulus that went into the markets in 2021 as a COVID response, and you can understand why demand is likely to fall off later this year, even starting now, but certainly more into the second half of this year. China's got a problem in that they have two issues, really. They've got this zero tolerance, zero COVID policy where they're shutting down all cases. And so not only did they shut down Shenzhen, the city that does a lot of manufacturing, it's huge, okay? They've gone on what I think now is at least 2 weeks of shutdowns. And now Shanghai is also getting shut down. And so, again, just think about what happened during COVID. Any kind of shutdowns in manufacturing in China are going to lead to more supply chain issues. This isn't rocket science from that standpoint. So that's a problem. And China is also removing liquidity from the system and trying to pop their real estate bubble. I don't know if you've heard of Evergrande or not, but Evergrande is the $300 billion real estate company that is massively leveraged with debt and can't really pay all the debt back, at least not on the current terms. And so there have been some very big concerns about their ability to pay going forward, China's willingness to bail them out, and then what we call counterparty risk, which is if they default on their loans, who do they owe that money to? And it's hard to say. I mean, certainly some of it's Chinese citizens, but the Chinese are more likely to backstop their own citizens than they are likely to backstop anybody outside of their country. So think about European banks or maybe even American banks, probably not as much American, but certainly European banks could absolutely be a big counterparty risk to what's going on in China. So China is going to be a big problem, I think. So moving on from China, we have just things that are going on domestically. And some of this I covered a little bit in the stock market, but it bears repeating here. Housing starts have fallen, so that's not good. Auto sales are starting to roll over now. Used car prices are starting to come back down. Mortgage rates are up to 4.5%. I mean, these are, macroeconomic in the United States. These are big picture issues that don't portend higher profits for corporations. So that's a concern. I did cover the University of Michigan consumer sentiment, which has been dropping really substantially, frankly. The PMIs, the producer manufacturing indexes are starting to roll over now also, which is not a good sign. So, you just look everywhere in the United States. We've got some issues. Again, if we talk about inflation, that's going to hurt the consumer. We're likely to have more supply chain issues. I mean, one example of this is, in Ukraine, they have 100,000 long-haul truck drivers, thanks to Paul Hodges from the PH report for this piece of data. But Paul points out that, a lot of these, if not all of these guys, got called back to fight in the war. So think about the disruption in trucking that takes place when you have 100,000 long-haul truck drivers that are at home, fighting a war rather than moving goods all over Europe, which then get potentially shipped, outside of Europe. So that's another example of how the supply chain is A, so fragile, and B, is going to be a problem going forward. So when you start to look at the sanctions that the United States and Europe placed on Russia, there are second and third order consequences to this. And, politically, they've talked about that sanctioning Russia is going to take a sacrifice from everyone. And the implication is that we in the United States and in Europe, obviously, have to be ready and willing to kind of, at a minimum, be inconvenienced, and certainly on a bigger basis, maybe pay some of the cost financially from these decisions. And so one of the things that, I think is a second order consequence that will have chilling effects, but not right away, is this. When we sanctioned the central bank assets of Russia, we froze their assets. We sent a signal to the rest of the world that basically, if you get on the wrong side of a policy debate with with the United States, we could freeze the assets of your central bank. And that's not a very comforting sign. And in fact, what we've witnessed is the trampling of, the rule of law and certainly international law as it relates to finance. And, we don't know what the longer term ramifications of that decision are going to be, but I would suggest that they're going to be substantial. I'm not in this camp that thinks that there's just going to be this immediate push for the rest of the world to move away from the U.S. dollar as the world's reserve currency. I know there's a lot of people that are kind of heading down that path, and while ultimately I do think we're going to get there, I don't think that's a short-term issue. I think that's more a long-term issue. This comes back to, in spite of the fact that a lot of places in the world aren't happy about the U.S. dollar being the world's reserve currency, a combination of, a lack of other alternatives in the immediate term, a lack of liquidity in certain types of currencies, a lack of trust with China for sure, and not enough gold to make gold the currency like we were. We moved off the gold standard for a reason. So there's just not a lot of short to intermediate term available options. But what I will tell you is that in today's day and age, things can move faster than they have in the past. And so my thinking is maybe this is a 5-year deal, but the reality is it could move faster than that, and we just don't know. We're going to get into this in the next segment as we talk about the geopolitical stuff, but I think this is going to push certain countries to develop their central bank digital currencies faster, and then that's going to push other countries to kind of follow suit. And so there's a path there that we'll discuss, but that's just one aspect of it. This idea that other countries are going to look at this policy and be a little bit nervous about what's going on, and I think those are legitimate concerns. I think as a result of what's going on with Ukraine and Russia, other countries are starting to take more protectionist and isolationist policies. They've banned a variety of different exports. One of the things I just saw was steel rebar has gone through the roof in terms of pricing. And again, that's not great for construction. Construction is a big provider of jobs and economic growth. So we'll see how that all plays out. But if you go back and look at, what Russia's doing essentially with not exporting certain, or they're forcing at least their exports to be paid in Russian rubles by countries that they perceive to be unfriendly. I wonder who they're talking about there. And as we go on, whether it's wheat, whether it's phosphates from China, whether it's seeds and seed oils from Argentina, and a wide variety of other exports that countries would have normally put into the global system, they're not going to do that. And so it's going to push prices higher. It's going to restrict resources. And what we're really seeing as a result of these sanctions, in my opinion, is the beginning of the end of globalism. Because, the supply chains have become so weak, as we've talked about already, that countries are going to have to fend them for themselves. And I think, when you look at the big picture in terms of what's going on in Russia and the Russia-Ukraine situation, I would argue that, there's more to what meets the eye there. And we're going to get into that in the next segment. So just from a macroeconomic standpoint, there are just very, very many things to be concerned about. And, I think that makes the balance of this year look pretty risky. And then how that all plays out, I think is going to be contingent to a large degree on, what kind of actions we get both from a central bank monetary policy standpoint, but also fiscal. Don't rule out the possibility that, at some point in the not too distant future, we could get another federal fiscal stimulus. They're already talking about it in certain states. Tennessee is talking about removing the sales tax on groceries. Gavin Newsom is talking about giving car owners $400. And when you think about this, all it does is drive prices higher, frankly, because you're creating more inflation. If you don't disrupt demand and you keep demand the same and you give more money to people to buy the things that they need, then there's no demand destruction, or at least less demand destruction, and so prices continue to go higher. So just typical political stupidity in the sense that what we're doing is we're coming up with short-term solutions that are politically scoring us points, but we're making the problem worse in the big picture, and that's not great. So that's going to wrap up the part on macroeconomics for now. There's certainly a lot more we could talk about, but I want to get into the geopolitical piece, and that's what we're going to cover next here.